I keep hearing silver's a poor man's gold. And quite honestly, it's not. Gold is gold. Gold is money. And I think people should own gold. It's the granddaddy of all currency. But silver is a very unique metal, very misunderstood metal. And I look at it as a strategic metal, meaning that this call we're doing today, and virtually everything that everyone does on the planet on throughout the day, through their 24-hour day, requires silver in some form. And what I mean by that is we don't realize, or I realize, of course, but many people out there don't realize that everything in their home, all their appliances, the electrical systems in their homes, your automobile, all your technology, all the devices that you rely on a daily basis, all have some silver in it. 2022, the miners produced about 850 million ounces of silver worldwide. And we consumed as a human race 1.2 billion ounces of silver, creating the largest deficit ever in recorded history. 2023, we're going to be producing the same amount of silver, 850 million ounces of silver, because the miners can't produce anymore. We're at our limit. And yet consumption is anticipated to be around 1.4 billion ounces this year. The consumption of silver, since I put the company together back in 2002, has grown substantially. We had silver go from $5 when I put the company together to $50 in 2011, and from 2011 it went all the way down to 12 in 2015, and then it fluctuated between really 14 to 18 for the next few years, and it didn't get back into the 20s until the last couple of years. And we had 27 a few months ago, and now we're back at around 23 or 24. And again, I said earlier, there's a record deficit of silver right now. There was a deficit last year of 250 million ounces. There's a deficit this year of over 400 million ounces. The deficit this current year, I should say, is likely going to be higher. We don't know the number, but call it 500 million ounces. So how do these deficits not affect price? The reason why it doesn't affect price is because we price our metal on paper markets, and the banks move the paper markets around at will. And as miners, we don't have control over price. Yeah, there's about 1 billion ounces of silver trades per day in the paper markets, and the mining sector produces 850 million ounces per year. So that's a lot of leverage, and in my view, it will break because I think the physical market is very important, and if these banks can't ultimately find the silver to cover their contracts, and people ask for deliveries, and we see people asking for more and more deliveries off the COMEX. We see the warehouse supplies dwindling. So I am quite optimistic that we are getting into a better marketplace whereby we will be seeing less of these big banks getting involved in some of these enormous short trades and short squeezes and so on. And I think that eventually the miners will get a better price for their metal, and that's why I'm the first to say triple digit silver. And I came up with that phrase, I don't know how many years ago now, over 5 years ago, and I've seen others now copy it, and so I think people are realizing that, hey, this metal is very, very critical, and it is mispriced, and people are coming into this market and buying this metal. And I'm more convinced today than I ever have been that we're going to see triple digit silver. We could build our gold portfolio quite easily. If I wanted to go buy a gold mine tomorrow, there's a list of gold mines that are available for sale, and we could build up our portfolio of gold mines and then become a gold company. We're in a unique spot. We're over 50% of our revenues from the sale of silver. The other metal we sell is gold. We just sell two metals, silver and gold, and we're happy doing it. We're love to expand our silver portfolio, and we're always looking around the world for the next silver mine to buy, but they're just very hard to find. One of the things your listeners should know is that if you look at the mining ratio, which some people say, oh, it doesn't matter, but I think it hugely matters, because we're trading at about 85 to 1. So what that means is for gold prices at 1950, divide that by the silver price, and you come up with about 85. Yet mining wise, we're only mining 7 to 1. So for every 1 ounce of gold being mined worldwide, the mining sector is only mining 1 ounce of silver. That tells you that silver is much rarer than the market is pricing in. And that's where I think the big change is going to occur. And I think, the Reddit crowd helped bring some education in the marketplace. And since that whole Reddit squeeze, the sales of silver has increased fairly dramatically because people are waking up to the supply demand fundamentals of this very, very important metal. If you have a mine that produces 100% silver, which we do, that mine would have costs of anywhere from $16 to $18 an ounce. So, at current metal prices, it's making money. But if you have a gold component, as we do in a couple of other mines, we'd be producing the silver at $12 to $13 an ounce because the gold is paying for part of the cost of production of the silver. So you credit those costs of production of that other metal to your cost for the silver. And every mine around the world is different. And I said earlier about some mines that are producing lead or zinc, they are producing silver, but they credit the cost of the production of those metals against the production cost of silver, and they come up with their all-in sustaining cost, which is published to the public markets, and that's what investors see. But it's not a fair measurement because every mine is very different, and it depends on the mix of the metal coming out of those mines. The markets got extremely weak in 2014, and I think it's probably the same as it is today. The valuations of the mining sector today are pretty ridiculous. Like, you look at First Majestic's share price, for example, it's around $6 US, and only a couple of years ago it was close to $30. So and it's just not First Majestic, it's the entire mining sector has been sold off, despite the fact that metal prices are reasonable. We've got gold at almost all-time highs, and silver not doing that bad either. I think the market cap today is probably 150, 160 million. So it's, down at some pretty cheap prices. I've been buying it myself over the last, I keep adding to my position every quarter. I buy a little bit more, and, with some spare change that I have, if I have any. And so I try to keep buying it because it is so cheap. But it's something for people that are looking for a developer, because it's not a producer. So, developers are a different world. There's 3 types of companies in the mining sector: exploration, and those are the ones that really rely on drill results. And it's almost and I do invest in exploration companies for sure because I am in the mining sector, but it's the riskiest part of the space, and it's almost like going to Vegas in a way, right? You can just like roll a dice and cross your fingers, and hopefully they hit. And when they do, you can do quite well, and it can get quite exciting.